Hi everybody, this is Ospreyeye from mychartcoach.com, and we're going to take a look at some more ticker symbols that should be in play for next week. Okay, let's look at MOSY. Okay, currently in the bull zone on RSI and FASTO, so looking good on both indicators. This stock made a really big move last week, and then it pulled back and the candles worked back into the Bollinger Bands. It bounced off of the bottom of the gap level. It's holding that and EMA 4. What we're going to be looking for next week is a break above the 100-day simple moving average at 184 and the top of the gap. That gap did fill last Wednesday, and so we're looking for a close above that level. If there's a close above the 100-day simple moving average, then the 200-day simple moving average will be the next target. You know, there will be some resistance to get through. You know, we'll have to bust through 250, but the chart is showing that as long as support holds, there will be more upside potential. On a pullback, look for the 50-day simple moving average is at 113 is the key level to hold. Notice there was really big volume behind the move last week. Okay, keep an eye on CGI. All right, this is a chart that is wound super tight. Okay, take a look here at the Bollinger Bands. As you can see down here, the upper Bollinger Band and lower Bollinger Band have become very, very tight, and now it's looking like a move is imminent. There's going to be either a break above the upper Bollinger Band or middle Bollinger Band support's going to break, and it's going to break down. And so it's currently at the top of the channel, and what we want to see is a close above the closing price here on what is it? 19th on the 19th of May, and that's also lined up. This is the bottom of the gap, and so if it can bust through basically the upper Bollinger Band here, then it could continue to fill the gap and make a run up here to the 50-day simple moving average and the top of the gap. This is 335 for the 50 SMA and 375 for the top of the gap. So this chart has been you know, setting up for quite some time. Look how tight the trading channel has been. Notice how the volume down here has gotten very, very light. The key is going to be a bullish volume spike and a push through resistance, and that's going to signal it's time to ride CGI higher. If there is a break below $2, if the $2 support level breaks, that's going to signal downside risk. Yeah, basically for this type of play, we're just stalking our prey and waiting for the ideal time to strike, and so we're waiting for this break above the high close resistance for the signal for the ride higher. You don't want to enter early because you could get stuck holding and waiting while the chart is setting up. Okay, take a look at SOXS. This is the Drixon Daily Semiconductor Bear 3 times. So this is basically shorting the semiconductors. And if you can see here, there's this giant volume bar that formed on Friday, and there was a big bounce. This had the fat dead cat bounce. There was a parabolic SAR bullish flip. Notice the green dots are now below the candles. There was a close above EMAs 4 and 8, and then it closed right below EMA 13. As you can see here on the other bounce, the last time there was a big volume spike and a bounce, it closed right below EMA 13 and it failed to break. And so that's been big resistance. It's currently the top of this channel, and that's also lined up with the middle Bollinger Band. So if next week there's a break above that level and there's a close above the middle Bollinger Band, you could see a new uptrend started for the you know, shorting the semiconductors, and that's going to be a red flag for the stocks in that sector. Basically, if this chart heats up, that's going to signal downside risk for the stocks in the semiconductor sector. This could be a way to, if they're under pressure, look for potential upside. You know, if a close above the middle Bollinger Band, that turns into support, you could see a run up to the upper Bollinger Band and the 50-day simple moving average. Notice how the chart's heating up here with the MACD bull crosses on both time frames. So you have the MACD bull crosses, you have the PSAR bull flip, the big volume spike, the close above resistance, you know, the crossover here on 80X, and then you've got FASTO now above 50 for the first time since the last run. The last time it got above 50 was back here, and then it ran higher and had a nice multi-day run, and then also you have RSI now above 30. It had been at oversold levels, and so now it's back above that. If it gets above 50, the chart's really going to heat up. So keep an eye on that tomorrow and this week. take a look at WKHS. This is a stock that has potential to break out next week, so keep an eye on it. The closing price on May 22nd is the key level to break. The chart here is winding tight as well. Notice how it's been holding middle Bollinger Band support. It's in the sideways channel. It's currently hitting the top of the channel. You know, that's around 395 or so. If it can close above this level and break out, then you could see a push higher. If it drops down below the middle Bollinger Band, currently at 353, that's going to be a red flag, and then you could see a big drop all the way down here to the lower Bollinger Band, which is lined up with the 50 and the 100-day simple moving averages. With this setup, it could double top as well. So it's really important this week that it bust out above resistance. So keep an eye on it. RSI and Fasto are both in the 60s, so they both have room to run. And yeah, in volume, you know, there was a couple of you know, there was this volume spike here on Thursday, so that could have been traders loading for the potential push higher. And then notice that MACD is pinched on both time frames. Bulls want to see the bullish crossover on MACD. There was a PSAR bull flip on Thursday, so the chart is heating up. It just needs, it's in the consolidation pattern, and it just needs to bust through resistance. Keep an eye on HOS. This is in the you know, energy sector. This is the really beaten up sector right now. This is a really nasty downtrend, and the reason why this chart is interesting is because of the big volume at the bottom. Notice the giant volume bars down here. You know, the big volume on the first trading day of June with the lower wick off the bottom, and then it's been trying to head higher ever since. There was a close on Friday above EMAs 4 and 8, and it's bumping up against EMA 13. You know, the last time it was testing this level was way back here in April, and it failed to break, and this downtrend continued. You know, it got to EMA 8 here on the 22nd, but that's as far as it got, as far as the share price was able to head higher. And so now at this level, it's hitting EMA 13 again, and so it's set up. It could potentially bust above that level. That would be a very bullish technical development, and that would put this middle Bollinger Band and this micro gap. There's a small gap between these two candles on deck. You could possibly see this gap fill. If that happens, and this does close above the middle Bollinger Band, then once again we're talking about a potential run up to the upper Bollinger Band and the 50-day simple moving average. They're both lined up, so keep an eye on it. If it fails to stay above EMAs 4 and 8, that's going to signal downside risk, and it could drop all the way down to 150. You know, the volume is what has our interest here. There are bullish crossovers on both MACD timeframes, and then if you look at PSAR, it's currently here at 210. And so when the share price breaks above 210, the dots will flip below the candles. So the chart's heating up. It just needs to break resistance. Okay, this is XII is a marijuana sector play that we've been you know, following. Last week it had a really big move. It was really cool. It broke above resistance, and then it just kept following through. So congrats to everybody that's been following our charts in TA. And what we were looking for last week was a close above the 200-week simple moving average, and that did happen. This is a weekly chart, so each candle is 1 week of trading, and the red line here is the 200-week moving average at 152. So there was a close above that level and high close horizontal resistance, which was back here in November of 2015, and then it was above the high close resistance here in September of 2016. So it closed above both of those levels and above the 200-week moving average. So that was a very, very strong move. It's now above, if you look over here, it's above all the moving averages on the weekly chart. So it's got a lot of upside potential right now, as long as it can hold support. On a pullback, you want to see you know, 152 and the 200-week moving average hold, and as long as it does, this uptrend should continue. Notice it's been really strong, holding EMA for support above the middle Bollinger Band. You know, you've got a nice uptrend off of the lows here in 2015. You know, it's channeling upward, and then now it's breaking above the top of this channel, so it could be pushing to the next level. Ultimately, if it keeps the uptrend going, you know, you're looking at it traversing back here to the levels back in 2014, and that's what's going on now. Now it's hitting resistance back here from 2014 in December, and it needs to bust through that in the $2 level, and then we'll be talking about working on this resistance zone here. So yeah, this is a really nice uptrend. uptrend. It had a big breakout, and the bullish development is, you know, not only did it have a breakout, but it was on huge volume. Look how it was the biggest volume in, you know, ever. You know, it's probably the biggest weekly volume in the history of the company. So when that happens, and you need to take note. You know, and you've got this, you know, MACD is really heating up. Yeah, so keep an eye on this XXII. You know, as long as the middle Bollinger Band is holding on the weekly chart, the uptrend is strong, and that's good for a longer term swing trade. Okay, look at BUDZ. This is another marijuana sector play. It trades over the counter. You know, we've been covering this stock. It had a nice breakout, and then it corrected, and now we've got a bounce here off of 50 on RSI, and then now Fasto's back above 50, and both have plenty of juice to run until overbought levels. It pulled back and held our 300-day simple moving average target. This long lower wick on the candle, that was a signal that it was loading, and then that there was loading, and then we showed before that the 15-minute chart heated up with people, you know, it turned bullish, and then there was good follow through on Friday with the white candle. It did break above the 50 simple moving day simple moving average, and it hit the 200-day simple moving average, but it pulled back. And so those are the two big levels to break next week. If it could break above those two levels, and then the closing price here on the 5th, then it could really break out higher, and we'll be talking about a potential run up to the 100-day simple moving average at 232. But first things first, it needs to break above these levels with the close above to make that run back up into the $2.30 range. You know, 170, you know, this high 169, 168 is going to be a big level to break. There is a nice uptrend here, and it did hold support on the pullback. You know, there's been really good volume behind the move. So you know, there was big loading down here. You know, there's big front loading, big run up, big lots of big volume. As long as support holds, the uptrend should continue. This is this is a key resistance level. So if it breaks above, that's going to you know, be signaling more upside potential. So keep an eye here. One more play for you. This is BITCF. This is an over-the-counter stock as well. It's been in this channel, sideways channel. It's got RSI and Fasto are both in the 50s and have room to run. What happened last week was there was a break above high close resistance. We wanted to see a close above the closing price here on the 24th. You know, that happened here on the 6th. We want to see this level hold and turn into support, basically 39, and then it's currently hitting this resistance zone here from April. It's working on breaking that. Once it can get through that level, we're talking about a run back here up here to 75 to 80 range. The high close back here on April the 18th. So yeah, the uptrend is still intact here. The candles are above the middle Bollinger Band. They're above the 50-day simple moving average. You know, it broke through our horizontal resistance we were trying to break through. Now it's got to break through the next level, which is this cluster of candles. And then if it can do that, then you're talking about a potential run back up to 80. So keep an eye on it. If it does close below the 50-day simple moving average and the middle Bollinger Band and this ascending green, ascending support line, that would be a major red flag signaling downside risk, and it could drop all the way back down to 20. So keep that in mind. All right, thank you very much for viewing this video. If you like this video, you'd like to learn more about charts and technical analysis, please check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Okay, thank you.